Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about what you guys should know before you guys use Robinhood. Now we're going to be talking about how Robinhood makes money, what Robinhood is, and then some of the top stocks and ETFs to invest in for beginners. Because I want you guys to be well aware of all the stuff available for you guys and really maximize your investing so you guys can make more money. Alright, now let's jump into the video, roll the intro. So for those of you that don't know what Robinhood is, Robinhood used to be a free stock trading group chat that really had a lot of traders and investors just talking about stocks and some of the stocks that they see value in. But Robinhood came out with commission-free trading. Now, one of the main reasons why Robinhood did this, because they looked and they realized that honestly it wasn't too expensive to buy and sell stocks. And a lot of these large brokers like TD Ameritrade, Charles Schwab, Interactive Brokers, they were charging so much money for their clients. Robinhood wanted to have more users and make less money off per user, rather than a lot of these big banks want a small number of users but make more money off them. So they kind of re-amped the investing field because they now had zero commissions. And that really changed the game. Now look at all these other brokers that kind of followed in their footsteps. We had TD Ameritrade, Charles Schwab, Interactive Brokers, Ally Invest, a variety of others, and more, you know. So really Robinhood was like that first broker to make that step and try to make money in some of these other ways. So here's how Robinhood really makes their money. The very first way is they have margin. Just like any other broker, they have margin. They do charge roughly 5% to actually use it, and that's not too bad. Some margin calls you can get for more. With other brokers, you can find it from like anywhere from 7 to 13%. That's very common, but Robinhood's only 5%, so it's pretty decent. Now the other thing that they have is the Robinhood Gold. So what this means is you can add up to $5,000 instantaneous and you get free level 2, which is cool, but a lot of other brokers have it for free, just to put that out there. Another thing that they have is like all this right here, just so you guys can see it and not have to say it. Now the last and final way that Robinhood makes money is for all the cash that's just sitting there and no one's using. What they're doing is they're reinvesting it and they're making money off it, just like any other bank out there, to be honest, because that's what banks do with your money. Is they charge you normally a fee to have your money sit there, and then they go and reinvest your money and they just make money off your money, and then they charge you to give them your money. Banks are, if you tried to explain to someone who was from another planet what a bank was, it wouldn't make sense. But you need a bank to get a mortgage, loans, and a variety of other things. So Robinhood does have roughly 6 million users, which is insane. And the first day they launched their zero commissions, they had over 10,000 users. The first year they hit 1 million. What we don't know is if Robinhood is even profitable. Since they're not a publicly traded company, we don't really have the right to know. So they could be breaking even or losing money. We have no idea. But now that we kind of understand what Robinhood is, what are some of the top stocks and ETFs that I would highly recommend looking at? Now the very first thing is you have to ask yourself this question. Are you an investor or a trader? If you're a trader, don't go through Robinhood. There's a lot better platforms out there like moomoo, like TD Ameritrade, and a variety of others that are commission free, still offer level 2, and it's free. There's no like monthly fees or anything like that. So those will all be down below. But if you're an investor, Robinhood is perfect, just because you can buy commission free. It's all on your phone, and you can even get it on your laptop. So you can kind of take it wherever you want to go, and it's very, very convenient. So now that you decided you're an investor, okay, so this is the stocks that you just buy and hold and you don't look at for years. What I would recommend doing is buying ETFs. What ETFs are, imagine if you had 50,000 stocks. You want to buy every single one. You want to buy a ton of them. But if you wanted to purchase each one individually, let's just say it would be $100,000. Now instead, they take them and they cram it all into one, and they call it an ETF. And now, instead of it being $100,000, it's only $10. Obviously, it's not going to be $10. This is just an example. So now when one of these stocks goes up and the other goes down, they break even. But if the general market and if the ETF is in a sector, because you can buy ETF weed stocks. So if the general weed sector goes up, the ETF most likely rips and goes to the moon. No, not really, but sometimes you can see it happen. So I would highly recommend looking in ETFs. Some of the top ETFs that I actually own are ticker symbol SPY. What that one is it's the top 500 companies on the market. So if one of the stocks goes up, the other goes down, break even, just like I said. But these are going to be the top 500 companies. And the cool thing about those, there is certain criteria that the stock has to meet to be in the S&P 500. And if one stock underperforms or doesn't live up to expectations, what happens is they kick it out and they instantly replace it with a new one. So obviously there is some maintenance fees, but the maintenance fees are like 0.03. They're super low. So if you have like, I wouldn't even worry about them. But if you come across the one that has a expense ratio of around 1%, there's better ones out there. But some of the top ETFs I like are SPY, like the one I just said, VU, which is Vanguard's S&P 500, and then I do like VTI, which is Vanguard's Total Market Fund, which normally you have to have $3,000 to even invest, but if you buy the ETF, you just have to purchase it for one small price. It doesn't make sense, but another cool thing about ETFs is obviously it reduces risk and you get a dividend. So a dividend is pretty much when a company makes so much money that they want to pay you for owning the stock. And these dividends can be like $5 or $6 per year if you own the right ETFs. But I'll make a separate video on the top dividend paying ETFs so you guys can understand which ones are good. But that will be probably in the next couple of days. Tomorrow we do have another episode, but it's on something different. But we'll see you guys. That is it. That's everything that you could possibly ask for investing your first $1,000. Finding a good broker. If you're an investor, Robinhood will be just fine. Overall, look at ETFs. I think a beginner's best friend is an ETF, and you can make great money, and it's perfect for everything you can ask for. So that is it. I hope you guys enjoyed it, and if you did, drop a subscribe down below. Do what you guys do. Don't forget AirPods giveaway. We'll see you tomorrow. Take care. Peace out. Boom.